Well, hey, real estate fans, Alice Lema here, broker John L. Scott in beautiful Southern Oregon with another edition of the podcast. And today we're going to talk about how the sellers don't have as many offers as they used to. Homes are sitting on the market longer for more days, and the feds are going to lower the interest rates next month. So this is what everybody was waiting for. They were waiting for it to get bad enough in their mind, the point where they don't want it to get worse, and then they're going to do something about it. But I lost a lunch bet over this because I really did think that they weren't going to lower it, not in September or October, not this close to the election, not this close to the end of the year, and not when things are going to stabilize, but maybe stabilize lower. So, but I was wrong. It goes to show you I'm wrong every once in a while. So let's look at this chart from NAR. They're actually putting out the data now. They're tracking how many offers on average in 2024. And so we're looking compared to 2023, 3.5 offers per seller versus 2.9 in 2024. And that doesn't sound like a big difference, but it really is. It really is, especially if you're the one on the market. You're also having fewer showings, but we'll talk about that another time. That's different podcast. So now let's put up the realtor.com days on market. We can see from 2022 to 2024, we've got a little bit of up and down, but look at how it's changed from 2022 to 2024. It's a significant difference. Now, having said that, the average neutral market has always been considered 5 to 6 months on market. But you know what I'm wondering is, in this high-speed data age and real-time analytics, I wonder if that average, that accepted average of 5 to 6 months is going to be changing. I wonder if in the next 12 to 24 months, they're going to say, you know what, we've got data and real-time analytics, and we're not going to consider 5 to 6 months the normal market anymore. We're going to consider 3 to 4 months. So that's just a prediction on my part, but let's wait and see. Actually, I shouldn't be making a prediction after I was just wrong about the Federal Reserve Bank. But do keep in mind that the digital age is in the financial markets, the real estate market, the mortgage market, and to some extent, escrow and appraisals. So that is all going to start playing a part in our daily life in these industries. So having said all that, let's talk a little bit about what the feds did this week. So they did their Wyoming meeting, Jackson Hole. Chairman Powell came on and made the announcement there's going to be some kind of a rate cut in September. Now, I want to caution people because that's not as good a news as you might think. Just to remind you what I said a minute ago, the feds feel that the economy is bad enough. They want to do something about it. So that's not a vote of confidence from my point of view, but there we are. And a lot of markets are excited about the future interest rate cut. If we have an interest rate that the market feels is really advantageous, the buyers are going to swarm the market. There's going to be a ton of refis, but there's also going to be a bunch of buyers out there. What happens when we have more buyers than houses to sell? Supply and demand. It's what I always say. Look for the prices to go up at least a little bit. And that was kind of expected because in the major urban areas, lately, those areas have already gone up a little bit in price. It's just places like Southern Oregon that are lagging behind. So what does this all mean? It means that if you were a seller in 2023 or 2024, especially if you're in late 2023, and you did not sell your house because you had the choice of renting it out or taking it off the market and waiting for another cycle, there may be another cycle right in front of us, and it depends on a lot of things. But having a lower interest rate, even if it's a quarter point, that's really gonna like excite the market. And I look for quite a few more buyers to come out even during winter. And our market is seasonal. Southern Oregon is seasonal, but let's see how strong of a winter market we have, because that'll give us a prediction for 2025. So if you're buying, get ready to fight. Or this is only the middle of August, get a house now, and then just refinance later. But do what makes sense for your family financially. You know, you don't want to be playing games and trying to time the market, because even professionals get that wrong. So buyers, get your ducks in a row, because you might be back to arm wrestling. Sellers, it's been the same decision all summer. If you need to sell to get on with your life or to resolve a situation like an estate or a divorce, or you're having triplets or whatever, if you're needing to sell, then sell, and don't let all this chaos and noise weigh too much on your decision. But if you really want top dollar, the markets will recover. They didn't go down that much, quite frankly, but they will go back up, especially if the rates go down. So do what's best for you and your family. This is always information for you and your family. Okay. And having said that, I'd love for you to call or text me at 541-301-7980, 541-301-7980. Would love to be your agent. I'm great with listings, great with buyers, great with investments and estates. Do a lot of first-time home buyers. Love getting people into their first real estate property, and also a lot of downsizing. You know, we've got a lot of boomers out there that are really ready to start doing that downshift, and setting themselves up for the rest of their golden years. So give me a call, give me a text, and also like and share this podcast. We love to see all those thumbs up. So thanks for watching. We'll see you next time. Bye now.